Hello, folks. We're just going to wait a couple of more minutes until we get a few more people on the call, and then we will start. So a couple of more minutes. Thanks. Right. So I think I'll start. It's just gone 7 o'clock. So kia ora, everyone. And my name is Alan Sharpe. I'm from Healthcare Plus, and today I'm going to be joined by Shane King, one of our Healthcare Plus reps, who's going to talk about health insurance. He will go over whether or not the health insurance is right for you and outline the different types of health insurance that there are out there. But before I hand over to Shane, just a couple of housekeeping items. At the bottom of the Zoom screen on the far left, you should see your audio settings. In the center are the options of chat, raise a hand, and Q&As. And on the far right is the option to leave the meeting. We're really keen to hear from you today, so feel free to ask questions as we go along. And please do that by using the Q&A function for that. You'll see the Q&A window will allow you to ask a question. Please make it concise and to the point. And at the end of the webinar, we will go through the questions and hopefully Shane will be able to answer them. If we don't have time for all the questions, don't worry, we'll be collating them all and getting our team at HealthCare Plus to answer them. And later on, we will email them out to everyone after the webinar. So look out for that. But anyway, enough from me. So kia ora, Shane, and welcome. And over to you. Cheers.
Great, thanks very much for that, Alan, and welcome everybody. What I'm just going to do now is hopefully share my screen with the presentation I'll run through, which should be up now. So before I get cracking, I just want to a little disclaimer and really let you know that this isn't advice that I'm giving tonight, but it is a general overview regarding health insurance, and we do recommend when purchasing any health insurance that you do seek advice just to make sure it's right for you. So with that said, we'll move on and I'll tell you a little bit about what health insurance is. So basically, if something does go wrong with your health, there are different avenues that you can access. And I'm just going to run through the three main ones there. So private health insurance versus the public health system. As you probably know, the public health system is there for acute conditions. And what I mean by that is, let's say I have a heart attack now. Hopefully my good wife will call an ambulance and I'll head straight into the public health system. And all going well, hopefully they'll get me going again. And that's kind of what we mean by acute conditions. It's kind of life-saving stuff, or very serious medical conditions. The public health system also do elective surgery. However, they may view an operation as non-urgent, which can result in lengthy wait periods that we often hear about. But for yourself, you might actually see something as quite urgent if it's happening to you. A few examples of elective surgery are things like joint replacements. So it could be a knee replacement, hip replacement, or things like diagnostic testing, such as a colonoscopy. And that's kind of where your private health insurance does step in, and it deals with elective surgery in a more timely fashion. The next thing that I've got on my list is private health insurance versus self-insuring. And it is quite an interesting discussion I have with people, clients and even family and friends. And your self-insuring refers to you saving for any future operations, which all sounds quite good and reasonable to do. But the only thing that can happen there is if you need a couple of operations that are quite close together, you can soon use up your savings. And certainly if you've got family members that also require operations quite close together, you can soon use your savings up. And what I generally find, people who have their savings there, they often use that for things like going on holidays, renovating houses, buying vehicles, that type of thing, when they build up a little bit. But one thing I would encourage you to do is actually look at private health insurance as a form of savings. And what I mean by that is you pay a premium and it goes into a pool of funds, and everybody else who has a policy also contribute to that pool of funds. And when you actually need an operation, then you've got money there that you can access for that. And in my experience, most people who do access it would pay a lot less in premiums than what operations actually cost. And I am going to run through a little bit about the cost of operations further into the presentation. And the final thing there is ACC, and how does ACC work with private health insurance? So ACC, as you all know, excellent compensation. That is your first point of call when you have an accident, and all insurance companies will expect you to go to ACC first. And so the liability essentially sits with them. There are a couple of exceptions, and one exception is if ACC agree to cover part of the cost, then your private insurance can often top that up and pay for the rest. So it's certainly not a reason to go and talk to your private health insurance company if you do have that in place. And the other exception is if ACC actually decline completely, then your private health insurance would respond. And I guess just by way of an example, my wife actually had a netball injury where she injured her knee. And we ended up going to the GP, and the GP referred us onto a specialist, and ACC paid for that. And then ACC also paid for an MRI scan. And the result of that scan was that it was degeneration, which we do hear that quite a bit with ACC. And so with that, we actually went to our private health insurance company, and they paid for the whole operation. Otherwise, she was going to have to wait quite a while in the public system. So as you can see, there are several options for accessing healthcare needs, where different organisations at times actually complement each other. But I guess the key point to make there is private health insurance can speed up the process at times when the public system's a little bit bogged down. So the next thing I'll run through with you is why have health insurance. And the first point there, I guess, is probably the key reason, is it gives you choice. And what I mean by that is it's choice of the time that you want surgery. And through HealthCarePlus, we actually deal with a lot of educators, as well as people through the PSA union as well. But certainly we find with educators, they often aim for the school holidays, which helps limit any sick leave that they have to take, because they then have that period of time, to plan for the next term or semester ahead. And that's exactly what we did with my wife. We got it through over the Christmas holiday. She was in education at the time as well. And the other choice it gives you is a choice of your provider for that surgery. Although some insurance companies do have what we call affiliated providers, but in all fairness, there's a lot of them around the country, and that's generally for certain procedures. The next point I got there is it actually limits your time off work. So as you'll probably know, there are illnesses and accidents that can actually stop you working while you wait for treatment for often long periods of time. And an example of that would be likes of your cancer. People get tired when they get that, and they certainly get tired through treatment, but they may have to stop work because they simply haven't got the energy, I guess, to actually work. And what I would actually suggest is your biggest asset is, or one of your biggest assets is your ability to actually earn an income. And without your income, you may struggle to meet your financial obligations, such as mortgage payments, the running of your home, such as your power, your food, and particularly any impact on any dependent children and their activities. And an example there, I had a client who was actually going through cancer treatment, and I went to see, I helped her put a claim in, and then I went back to, made an appointment, went to see her to let her know the claim had been approved, and she didn't know that at that time. But when I walked in, the first thing she discussed was her son. He was having extra tuition for his schoolwork, and she told me that she wasn't going to be able to actually afford to pay that because she's going to have to stop working for a couple of terms. And so I popped the claim form in front of her and said, well, look, if you sign here, you can actually go home and have a different conversation with your son tonight, and you'll be able to continue with tuition. She happened to have other benefits, a trauma benefit, which paid quite a fair amount of money, so she didn't have to worry about her income. So health insurance really allows timely treatment, which allows you to return to work a lot quicker. So if you've got to wait for the public system to respond and there's a wait period, you can get through a lot quicker with private health insurance, get back to work and start earning an income. So I hope that all makes sense. The next thing there is non-funded medication. So this allows for medication that is recommended. However, it's not funded by the public health system to be covered. And it's often in the media, no doubt you've perhaps heard of that, where people just couldn't have the medication because it wasn't funded. And a prime example is a mate of mine whose wife actually had terminal illness in New Zealand. And what I mean by that is she was diagnosed as less than 12 months to live, but there was a medication that could actually extend her life, but it was about $8K per month. And they paid for a couple of sessions of that, but they just simply weren't going to be able to afford it long term. And luckily for her, she was actually an American citizen, and she returned back to America to live, which kind of broke their heart because she'd been there for 30 odd years. And the treatment over there was only $250 per month. And it extended her life by about 8 years. Sadly, she recently passed away, but she did get quite a lot of extra time. But it's important to know there are health plans in New Zealand that can address that and can pay for that type of thing. And I guess the final thing is really your peace of mind. It gives you obviously peace of mind and takes away that anxiety of having to wait for treatment in the public system. So the above are really just a few key reasons why, certainly my clients choose health insurance for themselves. And I hope I've helped give you a few reasons as well right there. So I'll move on to our next slide. Is really understanding health insurance. So there are a lot of policies. If you've ever looked online, you'll see that there's plenty of policies out there, but we can pretty well put them into those three different categories there, which is your day-to-day health costs, your surgical, non-surgical treatment, and your specialists and tests. And I'll briefly describe those. So your day-to-day health costs, they're plans to help with the everyday well-being. And they cover a range of smaller health costs, such as your GPs and prescriptions. And HealthCarePlus actually have 3 day-to-day plans. And I personally have a primary care extra plan. It just is kind of what works for my family. And I've used this quite a few times for my children for treatment, particularly with sporting injuries where ACC doesn't actually cover all of the costs. So things like your physio, I've used it for my daughter for acupuncture and my son for chiropractor. And I recently used it for my daughter as well. We went and saw a specialist, and it cost $300, and we were able to get 150 of that back. So it's real good for the day-to-day and the well-being, and it kind of encourages you, I guess, to perhaps go and seek treatment when you feel something's not right, if you know you're going to get a bit back. Dental's another one, actually. I had my daughter have a tooth pulled the other day. She was horrified, but we managed to get a bit back on that too. So the next thing we had was your surgical and non-surgical treatment. And that takes care of the bigger costs. And again, things like your hip surgery, your heart surgery, and your cancer treatment, which is what we refer to as non-surgical. So that's things like your chemotherapy, where surgery isn't involved. And these plans simply allow you to get treatment in a more timely fashion. And then the final thing I've got there is your specialists and tests. So it is an additional module, and it allows, well, it helps pay for specialists if it doesn't lead to surgery. If it leads to surgery, then under the surgical plan, most insurance companies would cover the costs, generally 6 months either side of surgery. The surgical plan also would cover major diagnostic testing with most insurance companies for things like MRIs and tongue-tied CT scans. So as you can see, there are a range of actual health plans that are available. So it's really important to do your homework and just understand what you're wanting from a health insurance plan. So the next thing I'm going to run through is the terminology and just hopefully give you a bit of an understanding. And you'll see there are 5 key bits of terminology clients often ask us about. So the first thing there is your pre-existing conditions, and they relate to your medical history and conditions you've had now or perhaps had in the past. And again, examples are your joint injuries. You may have had high blood pressure or elevated cholesterol. And even if you have had, likes of your high blood pressure or your cholesterol levels have been up a bit, really important that you do disclose that on an application, just so the insurance company knows what they're looking at. And the next thing is exclusions and loadings. So exclusions are what an insurer will not cover on your policy. And there's 2 types of exclusions, which are your general exclusions and your personal exclusions. And your general exclusions are conditions that everyone's not covered for. So they're things like fertility treatment, cosmetic treatment, or anything around mental illness. And a personal exclusion is specific to the actual individual, and that's based on your medical history. And I guess not every kind of medical condition or treatment can actually be covered. Best suggestion is you get health insurance before something happens, and then you know you are covered. But not all pre-existing conditions would necessarily be excluded. And a couple of examples, one would be around asthma. If you've had that just during your childhood years and not into your adult years, then an insurance company would often look at covering that. And another example was perhaps broken bones. If you've had those in the past and you haven't got any metal wear in there, things like screws and plates, then they would often consider covering that as well. And there are some insurance companies that cover what we call qualifying pre-existing conditions after 3 years. We have a plan through HealthCarePlus that will do that, but certain conditions are always excluded, such as back issues, cancer, or heart conditions. So just something to be aware of. And loadings, what they are is an increase in what the standard premium is, the insurance company charges, for an extra risk. So an example of an extra risk might be your BMI, so that's your height and your weight, which gives you your body mass index. And if that's quite high, along with something like high blood pressure, then the risk is a lot higher to the insurance company, around things like hearts, that type of thing. And I guess another example is if you're a smoker. Most insurance companies will charge you extra for that. There are a couple that won't, but most of them would charge you extra for being a smoker. Again, there's an increased risk of the likes of your lung cancer. And an excess, how does an excess work? And a lot of you will be perhaps familiar with that, with house insurance or vehicle insurance. And we can also do that with health insurance. So it's an excess is the amount of money you contribute towards the total cost of any claim that you make. And the higher the excess, the bigger the discount, so the lower your premiums are. And it's important to know that premiums actually do increase with age. And an excess is a tool that we sort of have there to pull the premium down as we get a bit older. And we often use that when people hit retirement. They often go with a higher excess. And it's easier, I guess, to save for, perhaps an excess of 5,000. One company goes as high as 10,000. And if you put some money aside for retirement to cover the excess, it just allows you to go in and have the rest covered. And I have come across people who have had to wait when they've been quite a bit older for things like hip operations, and they're often in a lot of pain. So a higher excess can help you retain your cover there. And some insurance companies will charge an excess per treatment. and others will actually charge it per policy year. So again, just something to be aware of. And premiums. So your premiums are what you have to pay to actually have health insurance in place. And of course, if you stop paying your premium, then your health insurance will eventually lapse. They do give you a little bit of grace period, often up to a couple of months. But after that, the policy's cancelled and you'd have to start again. And your premiums are based on several factors. First is your age, and then of course the excess you're actually willing to pay, your gender, and if you're a smoker or some don't rate on that, and of course the type of health plan that you do need, and then your current health status. And the final thing there is guaranteed policy wording. So some insurance companies will guarantee their policy wording, and some don't guarantee it. So if they actually guarantee the policy wording, what it means is if you take a policy out today, that's the policy wording you have. So if an insurance company changed that policy wording in the future, then your policy wording stays the same. The exception to that is some insurance companies do have what they call enhancements, and they will pass that back if it benefits you. But if the enhancement doesn't benefit you, I guess you wouldn't call it an enhancement then, but if it doesn't benefit you, then you retain the more favourable policy wording that you have. And then you get other insurance companies that won't guarantee their policy wording. And what that really means is if they make a change to it in the future, then your policy wording changes, whether it's to your advantage or not. So just a little something to be aware of. So as you can see, there's a number of different terminologies with insurance, I guess, as with any industry. And I would recommend to you that if you don't understand anything, always ask some questions of somebody who might be able to help you. So we're just about there. The next slide I'm going to go through is what to consider when buying health insurance. And certainly the reputation of the insurer. Are they trusted and respected? And if you haven't heard of the insurer, then I'd suggest perhaps approach a financial advisor who deals in life and health insurance and ask them about their reputation. And of course, the range of plans of an insurer, and does it have what you need? So I mentioned earlier that there are a range of health plans available, and really depending on your needs, it may be actually better for you to approach a couple of different insurance companies to get a plan that suits you. And an example of that is likes of a day-to-day plan, maybe better with, I would say, HealthCarePlus, but that's the plan I've got. And of course, you may have a surgical plan elsewhere. So personally, I have my day-to-day one through HealthCarePlus, and I've also arranged through HealthCarePlus a separate surgical plan with another provider that we have access to. So in my case, it wasn't actually, it didn't fit with me to put everything with one insurance company. And I guess the other thing to consider is it important for you to have pre-existing conditions covered after 3 years? Is coverage of non-funded medication important? And of course, is covering day-to-day medical costs, for your well-being, is that important? So it's not a barrier to seeking treatment. The other thing there we've got is the financial stability. So it's important to know the insurance company is going to be there when you need it to be. So keep an eye out on that. You can often see it on their website. And certainly if you engage a financial advisor, we will tell you that anyway, particularly any insurance company we might recommend. And probably one of the most important things is the insurance customer service, and particularly at claims time. What's their service like there? So you can visit around the websites and you can see testimonials from clients. And I guess the other thing is to speak to a financial advisor, and they deal with them and they deal with the claims. So we've got a pretty good idea how they look after the clients, and we can sort of give you some guidance there. And of course, the sustainability of the insurance company, and the good old saying, remember, if a deal looks too good to be true, it probably is. So just research the insurance company, research the products they offer, and if they're offering a very good deal, just check that out. You want it to be sustainable. An insurance company really needs to collect enough money to meet claims into the future. So the next thing I thought might be quite useful, I mentioned earlier about the costs of surgery. So that's popped up on your screen there. And I'll leave that there just for a couple of minutes for you to have a look over. The big thing to know with the cost of surgery, it probably gives you an idea if you try and self-insure and save up some money, it can be quite costly. And if you have a couple of those things, a couple of years apart, you can soon deplete any savings. But just to give you a couple of examples, I've been in the industry now for 15 odd years, coming up 16. And about 10 years ago, I had a client who had breast cancer, and she required a mastectomy, she required chemotherapy, and then she required reconstruction surgery. And the total cost, and this is going back 10 years, was $72,000. So when you look at those costs of surgery, just keep in mind that is, you often need several treatments. And I guess a more recent one was a brain tumor with a client where the cost was $45,000 for that the insurance company paid. But she was certainly grateful because it got the treatment and very quickly, actually, which perhaps even saved your life. So the final thing I'm going to go through, my final slide here, and again, as Alan mentioned, if you've got any questions, fire them at us. But before that, this last slide here is it better to go direct or talk to an advisor? And just to give you some ideas, when we talk about direct, I'm referring to you going directly to the insurance company, to their website, we're giving them a phone. And if you decide on purchasing directly, I hope I've given you a bit more knowledge to help you do your homework there. But know what is important from the insurance company and from a policy that you want. Is it guaranteed wording? Is it cover for medication? And just remember, not all policies are the same. So if you want to buy direct and you go to one website, check out somebody else as well. And just make sure that, you are getting value. And just be sure that if you do go direct, that you're willing to work with them at claim time. That's really important because if you're going through a major illness, you want to be able to have the energy to deal with them. So that's just something to be aware of. But of course, I'm a financial advisor, and I would certainly recommend that you talk to somebody like us. We've got a whole team with HealthCarePlus throughout New Zealand. And I guess the advantage of that is we have the knowledge. We live and breathe this stuff, and we can recommend to you the right person or insurance company to look at, I guess. And the other thing with going with an advisor is we're there to also help at claim time. So it's not just about putting you into a policy and leaving you to it. If you ever got any questions around claims, that type of thing, always come and talk to us. A lot of insurance companies actually prefer you to go onto the website and do a claim, which is a lot easier and a lot quicker. But we are often, I know I certainly am, my clients in the background advising them, and I even have turned up to their homes to help them through that process. So that's, I guess, an extra benefit of dealing with us. But just make sure a couple of questions if you do engage a financial advisor is really just to ask them, do they deal with more than one insurance company? So sometimes you may get somebody who specialises in mortgage, but they might be aligned to maybe one or two insurance companies, which may limit their knowledge across the whole industry on what's available. So just something to be aware of. And of course, will they support you at claim time? Will they help review the policy, that type of thing? So I'll wrap it up there because I know time's marching on. But just a quick thing, purchasing insurance is a really important decision that you need to make, and you need to be confident it will respond when you need it to. And I guess the key theme I've been trying to throw out through the webinar is to do your homework. You pay the premium, make sure you're getting what you want, and seek advice. And hopefully that gives you the peace of mind that you need. So thanks for coming along. And what I'll do now is stop sharing my screen, maybe, or I'll pass it back to Alan for any questions.
Thanks, Shane. That was great. Lots of good information there. And I just want to reiterate what Shane says. Hopefully that gives everyone who's been listening some food for thought around what health insurance is all about and whether it's right for them. and what they need to be thinking about before they sort of enter into any conversations with insurance providers. I have got a couple of questions that have come through, so I'll just chuck this one out. If I use a financial advisor to arrange the cover, will it cost me more than going direct to the insurer?
Yeah, that's a good question. Thanks, Alan. And perhaps a few years back, insurance companies would make it a little bit less than going through a financial advisor, but that has all changed, and it's really on an even footing now. So it doesn't actually make a difference. I guess one thing I would say to that is it depends what products are offered as well. So, you know, for example, if you're going through a group scheme, that could be lower. And I certainly know with HealthCarePlus, we have a good plan through Unimed. That's well priced, and that's simply, I guess, the union collective and HealthCarePlus is good work on that. So there can be differences there, but depending on where you go through your union, you know, do you go direct? But certainly through an advisor, there is really no difference at all. So I hope that answers it.
Yeah, so I think basically the focus of that question was, doesn't financial advisor add any more cost to the conversation and to the cost of the product? And so I guess the answer there is no, they don't, which is good. The next question is, what happens if I don't disclose any pre-existing conditions? Because, you know, sometimes it's really hard to know whether, you know, to remember back through all your sort of medical history for the last 10, 20 years. So you might miss something. So what happens there? You know, what happens if I don't disclose some pre-existing conditions?
You know, I have had that in the past with people, because I think, like you say, Alan, that people's memories, it's hard to cast it back. I can hardly remember what I'd done last week, to be fair. But what often happens is the insurance company, when you come to claim, they're going to want to know what, you know, from your GP, if you had an issue prior to filling out the application. And if there was an issue, it will then go back to what we call the underwriter, who looks at your application, and they would then say whether they would have excluded or whether they would have loaded your premium, so increased it for extra risk factor, or whether they would have actually offered you the policy. So 3 different things can really happen is you can get an increase on premium, or you can get an exclusion applied, or they can avoid your policy, or I guess the 4th thing, nothing. You know, if it was childhood asthma, like I mentioned before, they're probably not going to worry too much about that type of thing. So really, it's a hard question to give a straight answer, because it really depends exactly what it is. Something like a smoker, if they find out you were a smoker, then they may charge you for those rates that you should have paid that you didn't pay. But in my experience, in 15 years, I had one policy that was void, and it was clear non-disclosure. So yeah, you know, he was telling fibs basically. So my suggestion, if you're unsure, go and get all your notes from your GP when you're filling out an application, and we can even attach it to them just to be safe. Just on mute there, Alan.
Oh yeah. Okay. Thanks for that. We've suddenly just had a burst of questions that's come through from everybody, and some of them are really good, and some of them are actually quite long. And some of them we could actually are quite personal, so we might follow up some of those questions individually. But one of the questions at the outset was, when is the best time to get health insurance? Because particularly with something like hospital cover, you know, if you're young, do you really need hospital cover? You know, so when, you know, or if you're older, when you think you need hospital cover, is it too late to buy health insurance? When's the right time to get health insurance?
Now, today. The thing is if you have if you have a condition, I have people that approach me who have had cancer and they want to get health insurance. And it depends how serious it is. You may not actually be able to do that, or you'll certainly have an exclusion. But for me, when my children were born, they went straight onto the policy. And I'm quite happy to share that. Like I've had 2 children with grommets. They've had grommets that have been done. I had one who had quite a large birthmark on her head and she got a mole within it. And we had that done privately. Of course, my wife's knee, I've been in for diagnostic testing. And my eldest daughter, she's only 14 and she's currently going through some health issues as well at the moment, which is going to go on to a specialist and they're talking perhaps an operation. And she's covered for that because we got it when she was young and it could actually create issues further in her life. So she's actually covered for that. So the best time is, while you're healthy, and if you've got a couple of things that may get excluded, such as joints and that, then so be it. There's a lot of other health conditions, but certainly, now's a good time. Is the best answer I can give you.
Oh, well, so what you're effectively saying is it's too late for me.
Yeah, depending on what you got going on there. Yeah.
There is a question here. It's an interesting one. It says, the premiums are more than I spend on my medical expenses each year. Can you speak to this? For example, when I had insurance in the USA, it was more of a reimbursement than 50%. It's an interesting one there. I mean, I guess with insurance, a lot of the time with insurance, you're paying for something that may happen or may not happen, but it gives you that peace of mind. I think with this must be more around the sort of not the hospital select, but around the primary care types of products that are out there in the marketplace. Have you got any advice on that or anything to say to that?
So just to double check that they're saying it costs more in premiums than what they claim.
Yeah.
I guess my experience, like I say, I've got the primary care extra, and often a lot of those claims I don't get to see because people just do it online. It's quite transactional with your day-to-day stuff. But for myself, there might be the odd year I don't get back more than what I pay into it, but I would suggest on a whole I do. And I think that is because I make use of it. I actually kind of use it as a well-being thing. So, we're covered for dental, 50% up to $250. And, for my wife and I, it takes a clean and it takes a checkup and some x-rays and there's $500 back just for 2 of us, and of course I mentioned about my daughter with a specialist. That was $300. I got $150 back. And the acupuncture for my daughter, crikey, that was about 10 sessions at $40 a session. So it depends, some years you may have more things go wrong than others. And I guess the other thing we do with the day-to-day through HealthCarePlus is if you have a health policy through us, so say another one with Unimed for surgical, you can actually get up to $500 of your excess back if the surgery is above $1,000 once a year. So I guess, it depends how you claim and whether you use it, whether you're going for things like glasses. I think there's a bit of reflection going on here, but again, I get a percentage on that too if my vision's changed. I'll take them off, actually. I can see them flicking away on the screen there. Yeah, so you can get some money back on that as well. So just make use of them as the best advice I've got, really.
Yeah, I mean, I think I would echo that, and I would probably add that, I think a lot of the times when people think of the day-to-day expenses, they're thinking about going to the doctors and stuff like that, which is fair enough. But if I think about what I do, I think in New Zealand, particularly around the sun and the prevalence of skin cancer, we should, or the general, I guess, rule of thumb is that you should be getting some kind of skin cancer check, particularly when you're in your sort of late 40s, early 50s, every year. And so that's $300 that you're spending on a mole mapping. And then, like you say, I went to the physio recently and had about 5 or 6 sessions of physio. And yes, the ACC will pick up some of the cost of that, but the insurance picked up the rest of it. So some years you're up and some years you're down. I think what it just does is it gives you the peace of mind. And when you actually, I think the key thing is to really understand what you're covered for. And sometimes when you take out insurance, you forget to look at your policy document, and your policy document goes away in the bottom of the drawer. And you don't look it out, and you might go and get some physio treatment, or you might go and get some blood test done or something like that, and you forget to pick up the receipt, or you forget to claim for it. And so I think being clear around what you're covered for and the areas that you are will potentially allow you to actually do more and do more in that preventative space as well. Like you say, it's great to go and get your eyes tested, on a regular basis every couple of years. Go and get your teeth cleaned. Nobody goes to the dentist because it's far too expensive, but there's an opportunity to get 50% of your dental fees back. And so therefore it's an opportunity to go to the dentist. For years I never went to the dentist, and then suddenly now I've got I guess a financial incentive to go to the dentist because I get some of that money back. So I guess answering that question, are the premiums more than I'm spending on my medical expenses? Then I think maybe you've got to look at what you're actually covered for and ensuring that you're maximizing your benefits, because these benefits are there. And if you do maximize them, you should, on the whole, be better off than not year to year. So I guess that would be my addition to that. Hey, look, it's about wrapping up time. So I just want to thank everybody for turning up tonight and listening to Shane and a little bit from me. I also want to thank you, Shane, for spending the time and taking us through all that stuff on health insurance. I think it's there's a lot of information there to unpack, and that's why we will be sending this recording out to everybody who registered tonight. So you'll get a copy of this webinar in your email in the next couple of days. Also, I think there'll be a little questionnaire in there around what you thought of the webinar, and are there other topics that you're interested in hearing about. I will just say that we're going to be doing one on estate planning and wills in particular. I'm just working through that at the moment, and that'll be coming out in the future. But we're happy to hear from you around any other topics that you might want us to talk about, or even to go into some of the insurance stuff in more detail, because today was a sort of general overview, but there might be topics within that we could actually go and do a bit of a deep dive into. So happy to hear your feedback on that. But thank you very much for everybody that came along tonight, and we'll be sending you out some information. We'll send you out the recording in the future. So all I'll say is thanks very much, and have a very good evening. Cheers. Bye.